I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but in the back of their minds know this is a strong market.
How far down? 10%?
I think that 7 to 10 is a possibility. And we've already had 2 7% corrections this year. So it's kind of, it's been testing investors' patience. But I think, I think we should expect turbulence.
Have cash on the side, get ready for a crash or maybe a 7 to 10% dip. You might call it a dip, some might call it a crash, and then get ready to buy some great companies at better prices. That's basically the message I got from Tom Lee. Now you might also ask, how come September just started and we're already in the red? Well, historically speaking, September has been a bad month, although there is this saying, sell in May and go away. But there's no something about September. I mean, sell in September and then maybe remember or something like that. I don't know. There's also a Santa rally, which is a bit more bullish. And yes, although the market is red today, I'm wearing green. It's reverse psychology, let's call it. But some explanations about red September is because, well, summer vacation, traders are back at the office. They're looking at their portfolio and maybe they're looking, saying, okay, things were quite good. We're back. Maybe it's time to sell a little bit, rebalance the portfolio, things like that. Could very well be. Plus, we're still waiting for the rate cuts. We're still waiting for macro data. And of course, in the US, the presidential election. So we know the market does not like uncertainty. And in the next, let's say 2 months or so, over the next 2 months, I should say, there are lots of things that might break or make the market. But then again, that's just short-term stuff, right? So let's go over a couple of things in this video, a couple of data, stocks that are down, my thoughts on this, what am I looking to buy in the next coming weeks or so, all of that in this video. Like, subscribe, hit all the buttons, would really appreciate that. Want to support me even further, do check out the link down in the description or in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So overall, by the way, this is on Coifin, link is also down in the description. Yes, lots of things moving, but focus on the screen here in the middle. Basically showing you the Dow Jones, S&P 500, Nasdaq 100, and the Russell 2000 year-to-date performance. Quite good, no? S&P 500 up 16.5%, Nasdaq 13.5%, Dow Jones Industrials up 8.8%, and then the Russell 2000 up 7.2%. Now, of course, we know that around a month or so ago, right, that Black Monday, we've got a huge decline. That's basically also what Tom Lee said. We already had a couple of retracements this year. Quite quick ones, right? Very V-shaped like recoveries. Unfortunately, as we've seen right in the last couple of years as well, we had that one in 2020, huge decline, then quick recovery. We've seen that here as well. He predicts or expects it to happen in the next coming weeks as well. Of course, might happen, might not. He does not have a crystal ball. That's just the assumptions that he's making. And if it happens, then you better have some cash to add to, well, existing companies that you hold, or maybe open new positions in companies that you were interested in. If I give you a couple of examples here, these are of course huge companies, the Nvidias, Google Alphabet, Tesla, and Apple. Of course, most of these stocks have done quite well, right, in 2024. I would say, I mean, Nvidia is still up, 140, now 123%, because it's down 7.4% on the day. Google is down 2.6%. Tesla is basically flat-ish green. And Apple, well, Apple hasn't moved much either. But here as well, we can see that when the market did decline quite sharply, that August 5th event, you can see that those stocks have come down and have maybe opened up a door of opportunity for long-term investors. Some went down harder than the others, depending of course on how much or how quick they went up already this year. But opportunities always present themselves. That's why it's always nice to have some cash on the side. And if we're entering a period of uncertainty, buying the VIX is also a good hedge. If we see volatile days like today, then you know that the VIX is going to pay you quite well. It's up 16% or so today. It was up quite a lot during that August 5th day. And so I made a list here of semiconductor stocks and then some other growth stocks as well. So Nvidia is down 7.7%, Intel 6.6%. There's still some restructuring talks around Intel selling parts of its businesses. So we'll see what happens with that. Micron back to $90. I think that could be an opportunity if it drops below $90, also down 6.2%. AMD down 5.8, TSM 5.8, ARM down 5.6, Qualcomm 5.5, ASML is also down 5.1, and then you've got SMCI, yes, SMCI, which was down a week ago 35% or so, is actually up 2.5%. Why is that? Well, because the CEO actually addressed the concerns, the delayed 10K, and also talked a little bit about the short report, but he will clarify even more in due time. So it's green when all the rest are red. If we continue down the list, but from other companies, so the SoFi, Netflix, Adyen, Trade Desk, Palantir, they're all down between 4 to 2%, and the only ones that are basically flat-ish to green, the likes of Disney, Lemonade, New Holdings, PayPal, no PayPal anymore, but PayPal, and Tesla. And this is an important picture to paint. Just because, let's say, the market might drop 7 to 10% or so, does not mean that every single name will drop. No, maybe the market will drop overall, but some names might only drop 1%. Some of them might actually be up 1 or 2%, depending on the business, depending on their performance. Some might have huge benefits from rate cuts. And so any macro news that could benefit even, let's say, harsher cuts could benefit these types of stocks, these types of companies. So yes, maybe there is a dip in the market, but there might not be a huge dip in each and every company. That's, in my opinion, a better way of a market that is, looking at a market that is working. Not having like constantly, everything goes up, everything goes down. No, good companies have to go up, will go up, bad companies will go down. In the last couple of years, I have a feeling that no matter what company you are, if the market goes up, you go up with it. If you're bad, if you're good, doesn't really matter. To me, that's a bit strange. Then, going back to the September aspect. So September is historically the worst month for global stocks, as you can see from this picture right here. Now, since everyone is talking about this, could this be a self-fulfilling prophecy, right? Could this be people saying, look, we know September is going to be a bad month, so let's start selling before the rest. And then, of course, it becomes a bad month because everybody is selling. Could be. If we look at the positive side of things, well, treasuries enjoy the longest winning streak since 2021 right now, right? So things are looking quite good for the stock market overall for 2024. High valuations, things are looking quite good. But if we have surprise shocks, right, even worse job numbers, so that could indicate that the economy is doing very, very badly, then yeah, maybe we might have another flush like we've seen a month ago. Currently, the expectations of a 25 basis points cut sits at 63%, a 51 sits at 37%. But it did change a little bit. Previously, that was 30-70. So we might be getting closer to to the consensus expecting a 50 basis point cut and not a 25. Of course, it will depend on some upcoming numbers. Which then again, when you think about it, it's a bit strange that they're looking for lagging indicators and not actually what happens and what will happen in the future. But okay, we've been talking about that. We've also been talking about this. US job growth down in July, unemployment rises to 4.3%, so that continues to go up. Not really, previously that was a good indicator towards getting rates cut earlier. Now it's getting quite dangerous, let's say, that it's growing so quickly and that the economy is not really doing that well. Plus the total non-farm payroll came in at 114,000, I think that was the number, and the expectations were 175,000. So definitely not good, but hopefully the numbers in August are better. Maybe not much better, because then again, if you have a huge green candle, then that could send another message to the Fed, and maybe they might not cut 50 basis points, but only 25, etc., etc. So yeah, lots of things to consider. Last thing here is something we've talked about a couple of weeks ago, so that's the SAM rule. So that was triggered after the July jobs report. So it's the 3-month moving average of the national unemployment rate relative to its low during the previous 12 months. So the rule is triggered when unemployment rises 0.5% from that level and has successfully predicted recessions 100% of the time, since the early 1970s, as you can see here on the screen. Now again, actually, I think it was 2022 or so, late 2022 or so. Technically, there was already a recession, but since we are redefining some words more recently, then it was not publicly a recession, although it was 2 consecutive quarters of negative GDP growth, which that's basically what a recession means. But yeah, this is something you want to keep your eyes on. But overall, it's all about short term here. It's about taking the opportunity to add to your existing positions. Of course, you have to pick good companies, because over the long run, who's going to remember what happened on Monday, August 5th? Who's going to remember that drop in stock prices? Not that many people, right? And even if we go to the extreme, the financial crisis, 08, 09, horrible time, right? But great companies survived. Great companies became trillion-dollar companies, $100 billion companies, right? Of course, we remember what happened. But even then, it was a thing, especially the stock market, because remember, the stock market rebounds before the actual real economy, because the stock market is forward-looking. So yeah, you have to take that into consideration. Of course, it's never great to see your portfolio in the red. You basically just add it, let's say, to a stock, and then, the next day it's down 3%. Oh, I did something bad. No. The thesis you had the day before is still the same thesis you have today, just that the stock price changed. That's about it. The business didn't change in a day. Can't change in a day, let's be honest. So yeah, overall, that's basically what is happening right now. Do share your thoughts down in the comment section below, like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.